Welcome, ladies and gentlemen. It's PDAC 2017, the last day, Wednesday. The floor is closed, but we are now at the offices here of Teranga. And you remember beautiful African gold producer. And we want to talk, an update with Richard Young, who is the CEO of the company. Richard, welcome and thanks for hosting us here.
Well, thanks for having us.
2 years ago, we sat here exactly in the same boardroom, did an interview. I think it's time for a nice update. And what happened?
Well, over the last 2 years, we've really changed. So when we last met 2 years ago, we were Senegalese focused, single asset producer. Today, we're now in 3 jurisdictions, and we've got growth.
What jurisdictions are they?
Burkina Faso, as well as Côte d'Ivoire. We think those are 3 of the most mining-friendly, prospective, gold-producing regions in the world. They're all in West Africa under the same mining code, legal system, currency, language. It's just terrific.
Perfect. Great. So let's talk about the last year, I would say, because you produce, you make money. So what happened?
Well, we did exactly that. So record production, 217,000 ounces of gold produced.
That's nice.
We earned $25 million despite the lower gold price and generated free cash flow. And we expect as we move into 2017 to have a similar or maybe a better year on the production side, generate more free cash flow. Costs are good.
Great. Where are the costs at the AIC?
Just a little over $900 an ounce.
Any room to bring that down?
Not really. I mean, I think over the next couple of years, just with some of the projects underway, the number will remain in the low nines.
Low nines. Okay, that's not bad.
Okay.
Cool. What other plans then do you have for 2017?
Well,
let's say call it production, enlarge or enhance the mine life, things like that.
Yeah. Well, the big news is last year we acquired an Australian company, Griffin Minerals, and they've got an advanced development project, Banfora, in Burkina Faso. So we've acquired that. We're completing a feasibility study. We expect to have that done by the end of the second quarter, assuming it's positive. We could move into construction in the third quarter, major construction in the fourth quarter. That would see first pour in the first half of 2019.
Oh,
and
that's fast.
That could increase production by 2019 by more than 50%.
Fantastic. Do you have to raise any money or can you do it from the free cash flow?
Well, we're looking at that. So as the feasibility study is completed, we'll get a sense for the capital costs. We've got $100 million in the bank. We're generating free cash flow from Sabodala.
Yeah.
Part will depend on what gold price we expect over the next 2 years, and then we're going to raise some debt. So we'll see where we end up. But
I mean, debt is cheap. That's not a problem.
Debt is cheap. But again, you don't want too much debt. So you got to protect the balance sheet because we are in a volatile commodity environment, and we're a price taker. But we'll look at that, and if we do need debt, we're not going to need much. The project's going to be very similar to our Sabodala mine. We actually internally have been calling it Sabodala 2.0 because we're actually going to build the same Sabodala mill in Burkina Faso.
Okay, fantastic.
That's going to lower.
Can you give us an estimate how much money you need? Maybe I know it's a forward-looking statement for sure, but are we talking about, let's say, $100–500 million? Just a rough guess.
Well, we think the project's going to cost somewhere between $2 and $250 million. Okay,
that's manageable.
We've got 100. We're going to be able to put some debt on it. And we've got free cash flow. So we might be close to being there. We might need a little bit of headroom. Part of it is we've got some tremendous exploration opportunities. We're spending $12 to $15 million this year, but that number will likely grow because we think we're going to have success. So we're now exploring in 3 jurisdictions. Senegal, on the mine license, 3 kilometers from the mill. We've just announced early last week some outstanding holes. We're going to have more to come. Do
you have some of the grades, some of the holes in your mind?
Some of the grades are quite high, 4, 5, 6 grams.
That would be open pittable then?
Open pit.
Wow, that's phenomenal.
Right from surface. The overall deposit is probably 1.5 grams, but it starts right at surface. It's oxide. Low strip ratio, so it's going to be very economic for us. So we look forward to that.
Yeah, especially at gold prices, let's say 1,200–1,300. Hopefully, we see the 1,300 early.
We'll make lots of money off of this. Absolutely, absolutely.
Great, fantastic. So, what is, let's say, the bigger picture? I mean, you described it already. You want to bring this Griffin into production, but where would you see the company like closer to 250–300,000 ounces producer then?
Well, with Banfora, assuming that the feasibility study is positive, we move forward, we would see production somewhere between 3 and 350,000 ounces. That's just the next phase. And then beyond that, we're exploring and we're looking for opportunities for the next mine that we could possibly build in 2019, 2020 that could take us to about 500,000 ounces. We're focused on the 3 jurisdictions that we're in, Cote d'Ivoire,
Makes
Burkina,
sense.
and
Yeah.
Senegal.
Yeah, because honestly, I love it always when the company has already an expertise in the country.
Yes.
That helps a lot.
It sure does.
Because you have established relationships.
It sure does.
Yeah, that's fantastic. Great. How about dividends for the future?
Well, dividends.
I know you're spending now money.
Yeah, dividends is
for
something
sure.
the board asks us each year to evaluate our
Yeah.
dividend policy. Now, where we're at today is with moving forward with Banfora. We think we're going to get a better return by investing in growing the company. We're at a unique time in the market where we've been able to pick up some terrific exploration properties and companies at the bottom of the cycle. We're moving through a growth phase. And as we move through that growth phase and build these projects and gold prices move up, then we're going to have a dividend policy. For now, we're focused on growing the company.
Great.
But we're always mindful of that. Our largest shareholder is Swiss. He owns nearly 20.
I live in Switzerland too. We
he-
love dividends.
he owns nearly 20% of the company.
Okay.
And what he wants to see is he wants to see us make money, grow the business, and ultimately pay a good dividend.
Fantastic.
As a shareholder.
That's a good plan.
So,
thank you very much.
that's
It was
the
a
focus.
great final sentence. I really like that because that's the way you should play it for the future, honestly, because dividends is the new interest.
Absolutely. Absolutely.
Great, Richard. Thank you very much for that. That was a great update. And keep us posted, please. And we look forward to reporting very positively about the
Great.
new mine then.
Well, and hopefully you'll be back next year and we'll have more to talk about.
Definitely, we will. Thank you
Thanks.
very much.
All right,
Thank
thanks.
you. Ladies and gentlemen, that was Richard Young, the CEO of Teranga. And you heard it. The company is already working in 3 countries in Africa, very successful, 217,000 ounces produced last year. They want to ramp that up to 250, 300,000. Next mine is already in the building phase. $100 million cash in the bank. That's always healthy. And also you heard him, they don't want to overstress with that, their balance sheet, because balance sheet means it has to be in balance. That's always important. And I really like that because a lot of good companies went down because of too much debt. And it looks like they have a great plan. So check out the company. Thanks for watching us. Bye-bye from Toronto.